Hello, everyone, and welcome to part 8 of the 10-part executive training series. This is ADR Method targets. In part 1 of part 8, we talked about ADR Method targets in market delta, and in part 2 of part 8, we're going to be discussing how to use the Advanced ADR Indicator in ThinkorSwim. So this is going to be a fantastic session here. I added a little bit to your cheat sheet slide, so let's take a look at that. So here is your advanced ADR indicator settings, and what I added was this piece right here, right there. And basically these give you the key readings that you need to know about when you are analyzing price based off of average daily range. Whether you're in a higher time frame or a lower time frame, the indicator will analyze whatever time frame you're in. And there are settings for this indicator that can help you achieve certain ends. So the first one is the basic ADR reading. So if you want to do a basic ADR reading, like what's the 1-day average daily range, then this number right here gives you how many days, and this gives you an average number of days that you want to do it for. The rest of these parameters kind of just stay the same for every single scenario, so you really don't have to worry about them, and I'll explain those more later. But right now, what you really want to know about is the 1 and the 10. So the 1 and the 10 are the important numbers. This is the number of days that you're averaging for. So this would be a 10-period 1-day average. So it'd be, what's the ADR reading on a 1-day basis over the last 10 periods? Give me the average. So this is what this is. If you change this 1 to a 3, you're going to get a 3-day range average over the last 10 sessions, or the 10 periods of 3-day ranges. If you change this to a 5, you're going to get the 5-day range average over a 10 period 5-day range average period. So hopefully that makes sense. So that's very important right there. It's just understanding that if you want to get a basic reading, like if I say what's the current ADR for a day, then you're going to go and put 1 and 10 in there, and it's going to give you the ADR reading for whatever instrument you're looking at. The next reading is how to do average range analysis. So if we're doing an ADR analysis and we're looking at the average ranges here, it can have predictive abilities for expansion, upcoming expansion. So if the compression is less than 65%, that's why we put this parameter in there, because now since we're doing an average here, if the average range, daily range over the last 5 periods is small compared to average, we could be looking at multiple day expansion ahead. If you change this to a 3 or a 5 right here, you're going to get the range analysis for those days as well. A 1-day average, a 3-day average, a 5-day. You could put more than that if you want as well. I usually stick somewhere between 1, 3, and 5. I choose among those options usually, but you can do a 2-day range. You can do a 10-day range if you wanted to. Whatever you want, you can do. It's just, I think sticking to the lower numbers really helps with the analysis and the way things look on the indicator. So if you want to do range analysis here, this can give you predictive abilities as well. And then if you want to do current range analysis, so what's the current 1-day range? Then instead of doing a 5-day average or a 10-day average, you put that number to a 1. So this is just a 1-day look. So what did the last day look like? So if you put a 1 here, it's a 1-day look back. So it's looking at what did the last session look like and what's that range. And then if you make this a 5, then it's going to look at what's the current 5-day range average. What's the current average. And when you're looking at current range analysis, that allows another layer of predictive ability. So those are the 3 indicator settings that we have right now, and then of course you would just change the first number here for each of these different types of analysis to give you what you need. So let's drop into ThinkorSwim right now and let's take a look at the advanced ADR indicator. Right here at the bottom of the screen you can see PivotBoss Advanced ADR, and that's the advanced ADR indicator. I believe I made an ADR indicator available before, but this one is even better. So I've upgraded it, and the last one was called Advanced because it was advanced for the time, but this one probably should be called Super Advanced ADR Indicator because it does so many more cool things. But I will make this available to the dashboard so that you can download it as well. So you'll be able to have access to this very soon. But let's take a look at the first reading here. If we want to do a basic ADR reading, I can double click on this indicator, and here are our parameters. And if I want to do a basic indicator reading, an ADR indicator reading for a one-day basis, then I would increase this up to 10 periods right here. So that's a 10-period average on a one-day basis. The rest of these we're just leaving alone. So I'll click apply. Okay, so in the daily time frame here we got, because this is a developing range here, since this is a developing range, this bar really isn't complete yet. So you want to go to the last available one that finished, and that's going to be this session here, and it's calling this one at 51 and a half points is about right. So you got about 51 and a half points of average daily range here. And this will give you the average over a 10-day period. So you can kind of see, if you go back in time here, you can kind of see that back in the end of November, beginning of December, volatility was very low and the range was very, very small. And then slowly that 10-day average started to go up, and, kind of went middle here and then kind of goes up. So it tells you something. I mean, just by looking at that information, you're able to see when the more volatile periods of time have been, right? And whenever price is trading in higher ranges, you got more volatility, more volume, you got more price potential, movement in either way, so it's more profit potential in that case. I mean, look at how big this move was that influenced all of this ADRs to go higher. And you can see how we were trading, 70, 65 points of range there. That's huge. Anytime you see that much range trade, though, that's usually an expectation that the ADR value is going to come down, and you're going to see a little bit of quieter trading to come. So there's always kind of a crescendo. You see it very quiet here. You see when it's very low and quiet. You can see this. That usually forecasts a big increase in ADR to come, and then you can see this happen. Then after you see this big increase, you usually see a period of quieter range, so you see the thing back off. And you'll go in and out of those cycles. So right now, what you're seeing is, prices were kind of quiet in here, the range, and that's kind of this action. And then you see the expansion, boom, boom. So during that expansion, you saw all of the ADR values go up. Now you see them kind of crescendo a little bit, and then you're starting to see them kind of tail down a little bit, and that's kind of this quieter range here. So we could expect these things to come right back into the mid-30s in terms of a range. But basically, you can see the type of way that I use it for analysis. Now since this is on an overnight chart, or rather a weekly or daily chart, a higher time frame end-of-day chart, it is using the overnight high and low as well for this calculation. So again, you can use ETH or RTH calculations, and you just have to know the tool you're using and what you're using it for. But I like the ETH. Give me the highest high and the lowest low, then just make it easy. So that's what I do there. So that's a one-day calculation. So you can see that it's been averaging 49 here, or 51, and now it's kind of back toward 49, but this is a developing bar. Now when you're looking at this indicator here, and you have just a basic ADR, so a value in 10, so one day and a 10-period average, you're also going to see this little line here. That's just regular average price. Average, that's your 10-day average, right? And then you're going to see this dot above and this dot below. They're a little hard to see sometimes, but this dot above and this dot below, and that tells you where the 125% level is, and this is the 65% level. So above 125 would suggest expansion, below 65 would suggest compression. But since this is an average, you're not going to see that. And that's when changing these values then becomes more dynamic, and you're able to see certain things. So that's the basic ADR analysis there, just giving you the basic ADR calculation. If you want to increase the number of periods here, then I would come here, and this one, Boom, boom, make it 2 or 3 or 4 or 5. Okay, so now that's a 3 period. 3 days. 3 days averaged over 10 3-day periods, right? So this is a 3-day average now. So on a 3-day average basis right now on a developing line, it's talking about 77.9 points of range. On a completed 3-day range basis right here on this bar, that's 80.75 points. So on a 3-day range basis right now, we're trading at about 70-something points, 80 points, or about 80.75. We're just a little bit below that right now. So that's what we're averaging on a 3-day basis. We can increase that to a 5-day basis as well. And again, 3-day ranges, 5-day ranges, those are really, really great range types to identify breakout opportunities. So basically, when I'm looking at price, I'm looking to see what's happening. And sometimes you'll know, like, say for example, price was rallying here, and then all of a sudden right here, it got really quiet. 1, 2, 3, 4 sessions in a row. So when you have these tight 4 sessions in a row, or 3 sessions, or whatever the case is, and I'm starting to say, wow, this is pretty tight, I'll pop up the indicator, and I'll say, okay, let's take a look at current range analysis. So that's a good segue right now to current range analysis. So what I'll do is I'll double click the indicator, and then when you do current range analysis, you can drop this down to 1 because you're looking at the most recent range. Now if you do the most recent 3-day range, or most recent 5-day range, or the most recent 1-day range, let's go with 3 days right now. So if I click OK, you can see it's updated the indicator, and now you have colors on the indicator. You have blue and you have the magenta, or the fuchsia color, pink, if you will. And now what happens is it's telling you every time you have a pink line, that's because price is compressed at or below 65% of ADR. So that's where those lines come into play when you're talking about these little dots right here. This is a dot, so that represents the 125, and this represents 65%. So if price is under that dot, it's compression. It's under 65% of average, and that's when you see these fuchsia. That tells you right there that price is extremely coiled up right now, and soon we're going to see expansion from that range and an increase in volatility, and that's what we saw here. If it's above that area, if it's above 125, that would suggest that we have, obviously, in a market that's seen expansion. When you see several of those in a row, you get something like that, and that usually tells you that you're going to see increased volatility, and whenever it stops, you're going to see the range shrink. So these are very, very important color-coded combinations here, because now, like we were talking about just a moment ago, if you get a narrow range, like 1, 2, 3 days here, it's very narrow, you look down, that's on this first bar right here. And now it's saying, oh, we got a very narrow range here. We got to watch out for expansion. Well, it was still narrow on this day as well on a 3-day range basis, even though we got a little bit of expansion to the upside. But really, it was still counting this 3-day range as very narrow. And then eventually, it went the opposite way, broke, and boom, you saw expansion the opposite way. But this line right here, being pink at the end of this day, and this one as well, told us that that range is very tightly coiled. And we should be expecting this type of range expansion soon. And that's why it's very important to see that. And then once you see this expansion and you see the volatility increase as evidenced by all of this blue, then that usually leads to price ranges that get smaller. And that's when you see a little bit more quiet range activity, even so much so that it's gotten below consensus here, 65%. So that's how you would use this indicator here to find these ranges. So if you go back to that period of time here, right here, and you look up and say, okay, there's that day, and look at this, that 3-day range, very tightly coiled. We have confirmation here, and then we should be looking for expansion out of this range. 1, 2, 3, 4, 5 days. You get a 5-day breakout move to the upside. So if you see if you're using a 3-day range or a 5-day range, you should expect about a 3 to 5 day range breakout move out of that range. So that's when making this, affecting this indicator in this way. So when you change these updates, you change the parameters here from 3 to 1, or 1 to 1, or 5 to 1. you're able to analyze the current range. And again, it's all about identifying when price is going to see expansion or when it's going to see compression. And again, that's where the forecasting ability of this indicator is very, very powerful. Let's bring up a different chart here. Let's look at, say, the NQ. So here's the NQ. Again, say you're hunting in the chart, like right now, for example, and I know today is not finished yet, but right now, this is a 3-day range average, or a 3-day range, 1, 2, 3 days of range, and it's very, very tight. That tells you right there we could be looking at expansion if price remains in this, if the range remains the same here heading into the weekend and this prints this way, we could be looking at significant expansion next week. And you know, this one was that way here, but we didn't see it. It just saw a continuation. Sometimes that happens. But look at this right here, 3 out of 4 right here. If we bring this up to here, that tells you that little bit right there. We saw one big day up, and then we saw it clean out the other way. A little fake and run there. But either way, that little bit of range right there told us that we should be seeing range expansion and an increase of volatility soon. And I think that clearly qualifies that easily. So you can see how powerful this indicator can be. Now let's take a look at 1-day range analysis here. So if we double click this. Okay, so here is the 1-day analysis. This is current range analysis. So anytime you have a 1 right here on the second, that's how many days you're averaging for. If it's just a 1, then it's just a 1-day average, which means you're just looking at the most recent bar. The most recent bar, because this is just 1 day. So this is current range analysis on a 1-day bar basis. Sometimes range is so tiny on that day that just that day alone can pinpoint a 1-day expansion opportunity, you know, or a 1 day where the next upcoming day can have some decent range. So oftentimes when I'm looking at this, I'm looking to see if there has been any significant high range days or significant low range days in the market. Like this day right here, this is the tail event day. Look how big that range was compared to average. See, this is average right here. So that line shows you average, and price was way, way beyond it on price range. When that happens, you can expect price range to shrink up a little bit. It's not just going to keep that high, especially after it's been, you know, it's had high range times. And that's kind of what happened here. We had this big high range day, and then things kind of shrunk up a little bit. And that's what we're seeing here. But now this range right here could provide a solid breakout opportunity soon if we were doing a 1, 2, 3, 4, 5-day range average. We'll see what this entails for later on. But right now you can see that just on a 1-day basis you're able to go back and see which was the super high range days. So if for example you're looking at this day right here and you see how high of a range that was, typically speaking you're not going to follow that up with another high range day. You're going to come back and do something a little smaller than that. And so this day right here is not a day where you're seeking expansion. You may be seeing digestion that day. So this is going to be a day to fade the extremes because it just followed a high range day. And if you're going to follow a huge high range day, you're likely going to trade in the smaller range the next day. So this helps highlight those opportunities for you very quickly. The same can be said when you're talking about expansion from low range days. This is a low range day right here. And then what we saw this day right here was a little bit bigger of a range, and then pow, it forecasted that move. But you know, sometimes you can get a 1-day range that's very small and then you see expansion out of that range, but usually I like to see a multiple day range breakout opportunity instead. Okay, let's change this now. Oh, let's go 5-day range. Let's go 5-day range. Let's see. All right, so here's a 5-day range analysis. Okay, so this is what I really like. When you're looking at current range analysis, this is 5-day range, and this is the current 5-day range. So it's not looking at it against anything else. It's just looking at what is the current 5-day range. So that's 1, 2, 3, 4, 5 bars right here. Well, the current 5-day range is very narrow compared to average. How do we know where average is? It's this line right here. That's average. Average is 260 points right now. And right now we're trading at 158 points on a 5-day range. So that's 100 points less. Right now this is 65% of average is 169 points. So we're trading 158. So if it got to 170 points, this thing would turn gray and it would be just a normal day. But right now, that's not the case. The case right now is we have very narrow price range action as indicated by the PivotBoss indicator here, the Advanced ADR Indicator. And on a 5-day range basis, right now we're very narrow. And you, typically speaking, when you get narrow like this and you look up, that's usually right here where you see some type of increased volatility. You get narrow right here, you look up, you see increased volatility. Right here, and you look up, you get increased volatility. Right here, look up, increased volatility. Right here, look up here, increased volatility. So I think, that's why I mentioned earlier, I think we could be looking at some significant expansion in the upcoming week of trading. This is all fuel right here. This is all fuel. And by still holding above the 4072 CLBN, holding above this wick area, you know, it could go either way right now, but this still has an opportunity to go much, much higher because we're holding above our zones. It hasn't been pretty, and instead you've seen a lot of building out and development. But right now, this is why I mentioned earlier, I think we could be looking at a huge week, especially with this ADR indicator, and it all comes down to this. So now you could use this indicator to create scans for, and now you can look at any universe of stocks that you want to, and you can say, bring me back anything that's below 65% average on a 5-day range basis or on a 3-day range basis. And now you're going to bring up all the opportunities that highlight times when you could go from this narrowness to this breakout, or you could go from this narrowness to that breakout, right? The same can be said for the high range stuff. You know, bring me anything that has high range, and now you know that you're probably going to be trading range bound in that upcoming period of time, and you can look to fade the extremes in that range. So that's how you could play that for predictive abilities. But looking and using this indicator in all its different ways, I know there's several combinations here, and it can get tricky even for me. That's why I wrote them down for you. You know, if you want just a basic ADR reading, go with the number of days you want to get that average for and put a 10 there in the average days here. If you want a 1-day current range, then put 1 and a 1. If you want a 5-day current range, 5 and a 1. You want a 3-day current range, put 3 and a 1. If you want to do some range analysis, make that 5 on the number of days, and then you're going to get some great predictive analysis, because I'll show you the difference now. See, this is a 5-day range, just a current range, and it's giving us predictive abilities. Well, now if we drop into the average here and make it a 5, 5, I'll show you what the difference is. It's a little difference. And actually, let's bring up another indicator, and just so you can see them side by side. So I'm going to add a study. User defined. Okay, there it is. So here's my new study down here. And then this one, we're going to make it a 5, 5. Oops, wrong way. 5, 5. Okay, so there it is. So you can see how they're a little different. This is a current 5-day range analysis. This is a current this is an average 5-day analysis. So the current range is narrow, just below its average. But if you're looking at a 5-day range average here, it's just over an average range. It's still not that narrow, just current compared to what's going on right now. This right here would suggest something that's even more and more narrow, right? And if you look at an average range basis, and that detailed the last point before we saw expansion. This detailed the last point before we saw expansion. This one right here detailed the last point as expansion was occurring. Here's one over here. I guess it was from this edge, and then you saw some movement. So this one is going to give you more confirmed opportunities based off the quick average. And this one's just going to give you everything based off of that 1-day event or that 5-day event, whereas this one's looking at averages. So this one has a little better, more clean confirmation. So if you're looking at a 5-day range average and you see these blues come into play after this volatility, then you're likely going to expect some sideways after it. if you see these blues come into play and you look up to here, you've had some volatility, so now you should expect some sideways. So that's a much cleaner option, is using this 5-day as a range average. This 5 days as a current range analysis, it still has lots of value. As you can see now, it's given us that heads up right now based off that 5-day range, whereas the average down here is not. Now let's go one more further here, and we'll finish it by putting up the last view here. So let's go to add study again, and I'm going to add my user defined study, and it's going to be this ADR. So here we're going to pop up the last one right here, and this one I'm going to make we'll keep this one at 10, and then we'll put this one up to 5. Okay, here we are. So these are the 3 styles that I've just basically went over with you. So this is the average 5-day average range right there, just a 5-day average. This one right here is a 5-period 5-day average, so it's much quicker and can offer predictive and forecasting abilities, and it gives you analysis on current range. Anytime you're doing a 10-period average here, that's just going to give you the raw average for the most part. So this one gives you what is the 5-day average, what is the weekly ADR, what is the monthly ADR, and you can just put it in there. And then up here, these are going to actually help you identify trade opportunities. This one's going to give you a lot of different opportunities based off the most recent current range. This one's going to give you more qualified opportunities based off the most recent average range. So those are kind of the subtleties and differences. You can see them and how all 3 of them, when you change just one little parameter, right now they're all 5-day ranges, but if you change this to a 1-period average, a 5-period average, and a 10-period average, you're going to get completely different results. But each of those parameter settings allows you to forecast trades, allows you to do a certain thing. You can scan the market using ThinkorSwim Scan, and you can set it to a 5-period, and then tell me whenever the average gets below 65%, now you can have this day on your radar right there, and now you can say, okay, we should be looking for expansion soon, and we should be looking for increased volatility. It wasn't pretty, but you saw, that's clear. A clear change of volatility from this period of time to this period of time. It's a clear change, and that's all you're looking for. Right here, you see it go from quiet to nice movement, right? And then, same thing back here. Just everywhere on this chart, it's just fantastic. Let's take a look here at a different chart just for a moment. This is crude oil. Since we've been dropping so much, let's see what it looks like. So if you're looking at crude oil here, you can see each of these. I don't always have all 3 up, but you can create a quick style right now. I can just make this an ADR style, so now it'll always come back, and I always have this style. I don't have to add these indicators over and over. Obviously, whenever you get a big wave of momentum here, a big blue patch here, that's usually during an impulse move phase. So here's our impulse range move, and look at all the volatility that comes in. But after you get all of that patch of blue, you're likely going to get very quiet afterwards, and that's what that action was. And then once you get coiled up here, that should tell you that an increase of volatility will happen, but that really wasn't the case here. That was a false signal. And we've looked at a ton of charts in different spots here. We haven't seen many of those false signals just yet. But very nice nonetheless. This is the spot here where if you look at this 5-day range average right here, it was so teeny tiny. We were able to see it with 1 bar, and then boom, you see movement afterward, and that's been the recent rally that we've seen. So that's pretty big. It's a pretty decent move there, and it was forecasted pretty quickly. So using these to identify moves in any of these charts, it doesn't matter what you bring up, futures, stocks, you're going to see a lot of these great opportunities jump off the page at you. And a lot of times, again, it's watching for those multiple day ranges when they coil up significantly, and you get something like this where it's a really tiny range and you see it's perfect, and then pow, you see the expansion from that range. Nothing beats it. I mean, that's all you're looking for, is look at how tiny that range is and look at this move that comes after it. That's what you're looking for. And this is exactly what this indicator is helping you identify. So that basically concludes part 2 of part 8 for the ADR method approach. This is strictly for ThinkorSwim here, where we're using the PivotBoss Advanced ADR Indicator live here with the 1, 5, and 10 period averages. It makes things fun. I mean, when you're looking through the charts and you're just looking at these color codes, oh, look how tightly coiled this one is. Or if you bring up, Amazon, and, we haven't seen this one yet after a big move down, but if you bring up something like this and you just start looking and you're like, wow, so that range was, that big move right there was preceded by this right here where you saw the push up. And look, we've seen a couple of these so far where you see this thing coil up out of this tight range. The first move right there was a fake move that helped set the opposite end of the range. And we've seen that happen a lot. So when you start noticing those tendencies and you go to trade this and you're like, here's the move and you're in on this day, you know that movement should go in the opposite way, but if it fails here or whatever it does, you can be assured that we're likely going to see movement in the opposite direction, and now you can adjust accordingly. But knowing the tendencies and the nuances of this is where experience really comes in handy, and just being in the room every single day. We're going to be covering more and more of these topics. Every single one of these parts to the 10-part executive training series was just a quick training to get you up to speed as fast as possible in the live environment, get you some cheat sheets so that you can know what we're looking for, how to use some of these tools. And then in the weeks and months ahead, we're going to be using this stuff day in, day out. I mean, I'm going to be scanning. I already have scans created, but looking for opportunities like this that say, hey, look at this 5-day range. It's tiny. We should be looking for expansion for those of you that are trading stocks, and boom, you see expansion. I mean, that's exactly what we're trying to do here, is just show you how to fish so you can go catch these fish yourself. This is how I catch fish. I create these tools. I know how to use them. I teach you what to look for and how to use it, and then we teach you how to engage the market. We're going to talk about entries and exits next Monday and Tuesday in parts 9 and 10 of the 10-part training series. So, that's going to be fun as well. I enjoy creating tools like this. I enjoy engaging tools like this. And again, this is a tool that's based purely off of price. And that's it. It's an average price and a current price tool. It's not looking at volume. It's not looking at this indicator or that indicator. It's just looking at raw price, and it's giving us these fantastic setups to look for based on price coiling up, compression, and based on expansion. And that's all that we talk about at the very beginning of the executive training series, was price-based analysis and how it's all about compression and expansion. It's all about knowing why price is moving and then engaging the market in a way that offers the highest odds for success. Having indicators like this where you can quickly reference and identify opportunities, it makes things so much easier, and it makes in engaging the market so much more profitable. All right, so that concludes part 2 of part 8, the ADR method targets. And this was the Think or Swim portion of this training for the 10-part executive training series. Again, thank you all very much. I can't wait, and I look forward to continuing to implement these techniques with you with these indicators in the future in the PivotBoss Premium Trading Room. Thanks a lot, and I'll see you soon.